Hello, everybody. This is Alan Ellman, the Blue Collar Investor, welcoming you to this BCI podcast number 147, titled Best Technology ETFs for Our Option Selling Portfolios. We're going to be using real-life examples with Technology Select Sector SPDR Fund, which trades on the New York Stock Exchange under the ticker symbol XLK, and Invesco QQQ Trust, which trades on the NASDAQ exchange under the ticker QQQ. So what are we looking to accomplish here? Here is our proposed strategy. We're seeking to add a technology presence to our covered call writing and put selling portfolios. And we're going to try to do it with the highest degree of diversification and in a practical, user-friendly manner. Now, we can do so by using exchange-traded funds, ETFs. These are mutual funds that trade like stocks, which means you can buy and sell them during the course of a trading day. And many of them, certainly the two that we're going to be talking about in this podcast, have options associated with it. So specifically, we're going to be using ETFs based on technology benchmarks. Now, the two ETFs we're going to talk about are XLK, the Technology Select Sector SPDR, and QQQ, which is Invesco QQQ Trust. This podcast is going to compare these two funds and determine which, if either, would be a better candidate for our portfolios. So let's start now by reviewing, and by the way, these slides and information for this particular podcast was gleaned in the middle of May 2022. The top 10 holdings for XLK as of that date were the following, and you'll notice the top two were Apple and Microsoft. And Apple had a presence of more than 23% of XLK, and Microsoft over 22% of XLK. So between them, over 45% of that particular ETF was represented by two securities, Apple and Microsoft. The other 8, NVIDIA, Visa, MasterCard, Broadcom, Cisco, Adobe, Accenture, and Salesforce. So those were the top 10, all very impressive technology-based companies. Now, at that same time, in May of 22, let's look at the top 10 holdings for QQQ. And actually, the top 1 and 2 are the same as XLK. We had Apple, which represented almost 13% of the Qs, and Microsoft, which represented over 10% of the Qs. The other 8 in the top 10 were Amazon, Tesla, Alphabet Class C, Meta, Alphabet Class A, NVIDIA, Broadcom, and Costco. Once again, all very, very impressive corporations. Now, what I did was I created a 2-year comparison chart of the Qs and XLK. For those of you who are actually watching this podcast, the chart shows a blue line, which is represents the Qs, and a purple line, which represents XLK. Now, I will describe this for those not watching this podcast. And as the trend was moving up in the first year and a half of this 2-year chart, it was almost precisely the same, the price movement of the Qs with XLK, almost exactly the same. Now, when it started to move down as the market declined in 2022 with COVID and inflation concerns, actually XLK did slightly outperform the Qs in the down market. So the red arrow on the chart, the up market, shows that the two were performing almost precisely the same. When the market started to decline, XLK slightly outperformed the Qs, but if I had to give an overall assessment, I would say the two securities perform similarly. Now, let's move on now to a very, very important factor with our securities for option selling, and that's implied volatility. The reason this is so important is because implied volatility will measure two very important factors for us. Number one, it'll give us a feel for the premiums we're going to be generating when we sell these options, because the premium is directly related to the implied volatility of the underlying security. The other factor that IV gives us is the amount of risk we'll be taking when we use these securities. So, for example, and I'll just kind of make up some numbers here. If a security had an implied volatility of 80 and another one we're comparing had an IV of 20, we could say the following. The premiums that we're going to generate with the 80 IV is going to be much greater than that of the 20 IV. But we can also say that the risk incurred when using that 80 IV is going to be much greater than that of the 20 IV. So what I did was I went to ivolatility.com. Once again, we're in the middle of May 2022. The implied volatility of the Qs was 21.21%. Now, the implied volatility of XLK was 21.89%. Couldn't come any closer than that. So from an IV perspective, really no difference between these two securities. Now, let's have an overall view of this podcast, and I'll throw in one more caveat here. There is little difference between the price performance of these two securities, with XLK having a very slight edge in a down market. Now, this is something that can be important. XLK has a lower price point. It was actually trading less than half of the Qs, 144 to 319, at the time that I am creating this podcast. Now, both will offer very significant, high quality, diversified technology presence in our portfolios. Since they're ETFs, there is no concern whatsoever regarding earnings reports, as there would be if we were using individual stocks. XLK, again, this is minor, but let me throw it in to be thorough. XLK has a slightly higher dividend yield, at the time 0.73% versus 0.46% for the Qs. Both, ladies and gentlemen, are excellent, excellent choices. Before I go, as I always do with these podcasts, let me mention to you our two best packages. First, the BCI package, which is an acronym for our best and most comprehensive investment package ever offered by the blue collar investor. It has 18 components in it, 6 online video courses with downloadable workbooks, 6 calculators invented by the blue collar investor and therefore found nowhere else, 5 of our best-selling books in ebook format on both covered call writing and put selling, and our annual 13-month premium membership, which in and of itself has well over 200 components, which includes over 200 training videos, as well as our 4 reports on eligible option selling securities and dozens of other files and resources. Okay, our other package, which is our most recent package, includes our trade management calculator, a one-of-a-kind, the only one in the world to our knowledge, which allows us to enter our trades, get initial calculations, then adjust our trades with over 20 different exit strategies and get final calculations of our trades. And we can archive them per contract expiration. The package also includes a 28-page user guide, as well as my 8th book, Exit Strategies for Covered Call Writing and Selling Cash Secured Puts, in PDF format. And that's our TMC package. Now, you can find out more information on these 2 packages by clicking on the link. Go to our website, thebluecollarinvestor.com, and click on the link where you see the red arrow. For those just listening, it says Best Discounted Packages, and we have information as well as explanatory videos. You can also go to thebluecollarinvestor.com/store to get these items individually. Ladies and gentlemen, that concludes BCI podcast number 147, Best Technology ETFs for our option selling portfolio. Folks, I hope you enjoyed this presentation, and most importantly, I hope it puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.